next session is being presented by Rene, Garcia. Expand your business, tapping into Canada's fastest growing client segment. Rene Garcia is SVP Broker Channel at Home Equity Bank. The provider of the CHIP reverse mortgage, he is on a mission to grow the broker channel and unlock the potential of the CHIP reverse mortgage as an integral part of every broker's product lineup, serving Canadians 55 plus. Prior to this, he spent 35 years in various bank executive roles, 10 of them in the mortgage division of TD Bank, where he was responsible for leading national sales teams of over 1,000 mortgage specialists and the mortgage broker channel. An experienced financial services executive, Rene has proven history of building successful businesses, developing people, and delivering exceptional results across a national footprint. He is an authentic and inspirational leader who attracts diverse talent and nurtures an inclusive culture in creating engaged and highly effective teams. Welcome to the stage, Rene.
So here we go. Let's start with this. It's a bit of a personal note. Those are my in-laws, Angelo and Anna. The AV people did a great job of getting this picture up in the last minute. It's a little bit blurry, but this was a notification in the Hamilton Spectator. On September 3rd, they celebrated their 70th anniversary. 70 years. And why do I show you this, other than the fact I'm proud that they lasted that long? My father-in-law is 94. My mother-in-law is 92. My mother's still alive. She's 91. So my immediate circle of family are in their 90s. Why do I share that with you? Because it is the new wave. It is what's happening. When that appeared in the Spectator, I was on a mission. I had to apparently go buy every copy of the Hamilton Spectator and be able to give it to my in-laws as a gift to show them, their announcement, basically. To my surprise, when I opened the classifieds in the Hamilton Spectator, there were pages and pages of these types of announcements. I thought this was going to be rare. I mean, 70 is rare. There was someone in their 75th anniversary. There were a lot of 50th, 60th, and so on. So what does that tell you about our demographics? They're aging. As Canadians, we're getting older and older. I can attest to that. And the fact is that this demographic is now the single largest group in Canada. And for people like Angelo and Anna, I mean, they're fortunate. Angelo had his own business. He did great in the business. He put money away, and they're actually financially stable. But here's an interesting fact. Angelo has a great-granddaughter, and he'd love to give that great-granddaughter a gift. And when he says, I want to give her a gift so that I know that her education's taken care of, and he asks, how much would that take? And we say, well, these days, start at about $50,000. And he says, okay, I'll give her $50,000. But what does that mean if I want to give her a gift? Well, it means I've got to cash in some of my investments. And although he did quite well, and he's got money in investments that sustain them, he's still worried about cashing in investments because, first of all, there's tax consequences. Secondly, he's worried that he may not have enough money because he plans to live to well over 100 years old, right? So even them that are financially stable, great, and older in age, celebrating a great anniversary, have the potential to look at a reverse mortgage. They live in a condo, by the way, that's worth about $700,000 or $800,000. Even they have the potential to look at a reverse mortgage for their potential needs. And in this case, it'd be to give a gift to their great-granddaughter. Their only great-grandchild, by the way. So this is really the reality in Canada of aging Canadians. 41% of Canadian homeowners are now over the age of 55. I'm a baby boomer. It was our mission to buy a home. And fortunately for us, when we first bought our home, it was doable. It was something we could actually afford. We saved for a couple of years for a down payment, and then we bought our first house in 1988, $188,000 in Oakville. $188,000 was a new build. When we tell that story to our kids, they think we're joking. But we're not, because we know that real estate appreciates, and for boomers, And the older generation, that was what they wanted, was to buy a home and live in that home. There's more Canadians now over the age of 65 than there are under the age of 15. 3 million households enter retirement in the next decade. 66% of retired Canadians still carry credit card debt, and 20% of retirees are still paying mortgages. Imagine that now. You're heading into retirement and you're carrying a mortgage with you, something that, again, was instilled in us as boomers. Debt is not good. You must pay down your mortgage, certainly before you retire. Unfortunately, with things being the way they are and inflation being the way it's been, some Canadians, 20% of Canadians, weren't able to do that, and they're actually retiring with a mortgage.
Retire. Retire the cliches, like the forgetful geezer and the hopeless technophobe. Retire over the hill, out to pasture, past your prime. Retire all the cliches. And let's make retirement mean new beginnings, passions, financial possibilities. Retirement can be however you define it.
Redefine your retirement with the CHIP Reverse Mortgage by Home Equity Bank.
That's a commercial that we've been running now for a while, and you might recognize Peter Mansbridge. If you're old enough, you know who he is. He was the anchor on CBC News, a well-respected journalist in Canada. And it's interesting because the younger generation doesn't know who he is, but the younger generation aren't the ones needing reverse mortgages. But the interesting message that we tried to convey here is that as much as, again, as baby boomers, we grew up with this ideal of, buy a home, pay off the mortgage, go into retirement, and then, kick up your feet and relax and watch TV all day, game shows, or, the cliches that come along with retirement, like an old geezer, right? We're trying to dispel that because if you study older Canadians now, you'll find exactly that. They do not fit the stereotype. They don't fit the stereotype of what it is to be in retirement based on what we thought it was going to be. And so one of the first challenges for you as a mortgage broker, if you're aiming for this demographic, is to not make assumptions. Not make assumptions about who they are, what they enjoy, what they like, and what they think their retirement should look like. In fact, my 94-year-old father-in-law is on Facebook. He actually uses his iPad that we gifted him a few years ago to look up all the specials at grocery stores so that he can go and pick up all the things he needs. Not like he needs to do that, but he does that as a pastime. So again, don't make assumptions. 94-year-old can actually be technically savvy. I was talking to someone at the booth who said to me, they have a 55-year-old customer who doesn't even know how to do like DocuSign or doesn't use email or any of the technology. So again, don't make assumptions about older Canadians. Next, I want to talk a little bit about first-time home buyers. So show of hands here. How many of you have done a first-time home buyer mortgage in the last 6 months? Show of hands. Okay, that's good. That's really encouraging. They still are out there. There are still people buying homes for the first time. Of those first-time home buyers, though, how many of them actually needed help and support in the form of a gift from either a parent or a relative? Show of hands. Right, exactly. So again, the statistics show us that 31% of first-time home buyers received a financial gift. Just in 2015, that was only 20%. So again, what it's telling us is that homes are becoming less and less affordable for younger Canadians. And so now it's almost become a standard that they rely on some form of gift from either their parents or relatives or maybe even friends to help them with that down payment. The average gift was in 2019 was $115,000. I know for a fact, if you look at GTA specifically, or even Greater Vancouver area specifically, it's more like $200,000. So let me ask you this, as a broker, you need to know the source of the down payment. I'm sure you ask that question every time because you need to prove it to the lender. When you ask them and you say, where is the down payment coming from? And they say, well, it's a gift from my parents. The next question to ask is, where are your parents getting that money? Because again, I've been in this situation. We've got 2 adult children that we helped them get their first home. And we offered to give them a gift. And then when they agreed, it was actually funny. One wanted it, the other one didn't. But when they finally agreed to it and they bought their first home, our challenge became, where are we getting that money from? I know that I've got it. but it's tied up in investments. And so we literally had to cash in some investments. We took a tax hit that year because we were both still working. We took a tax hit, and as important, I no longer have that money in my investment portfolio, compounding and growing for my retirement. So while we wanted to do the right thing for the kids, it definitely hurt in terms of my financial and our financial situation, my wife and I. The other option is, I know that many parents will go and borrow the money. They'll get a HELOC. But again, if the parents are in the age range of 55 to 60 to 65, and if retirement is just coming or they've just recently retired, how will they continue to make that HELOC payment every month, right? So as a broker helping first-time home buyers, you really need to ask that second question: where are the parents getting the down payment money or the gift that they're giving to the kids? And I bet you, dollars to donuts, there's a lot of situations where they could benefit from a reverse mortgage on their home as being the source of that payment. Even move-up buyers these days are requiring some help and support. And again, in many cases, they're asking their parents, or the parents are offering a gift for them. So something for you to look at.
Oh, what's wrong with Dad?
Oh, he threw his back out yesterday. I think it's time you and Dad moved to a smaller place. I bet it was those stairs. It wasn't the stairs. Actually, we love the stairs.
Oh. More tea? No.
Retire in the home you love with a CHIP reverse mortgage from Home Equity Bank.
Again, that was a great commercial that we ran, I think, a couple of years ago now. And it really got a lot of press because it does a few things, right? First of all, it shatters the stereotype, again, of older Canadians, right? And even our kids, like our older kids, our adult kids, think of us in a certain realm. I'm still working. I don't need to be working, but I'm still working. My son calls me the dinosaur of Bay Street, right? Because he thinks like I'm past my prime. Why am I still working? I should be at home. I should be enjoying retirement. But that's not who I am. I've still got lots to do, lots to contribute, lots to say and achieve. But they don't always see us that way, just like in the commercial. They don't see us that way. So again, if you're dealing with older Canadians, remember, shatter those stereotypes. And the other set of commercials that we did in that realm was, adult children counting on their parents for either an inheritance or a gift. The statistics show it. I mean, now it's pretty well become normal. I know when we were young and we bought our first home, we never would have thought of asking our parents for money, nor were our parents in a situation to give us money as a gift to help us with that down payment. But then we didn't need it either, right? So it's become quite the norm. Okay, so basics. What is a reverse mortgage? And I know that, for some people in Canada, gotta go backwards. For some people in Canada, when you say the word reverse mortgage, it makes them cringe. For some of you, it makes you cringe. I know when I talk to brokers, they're like, oh, no, I don't do that. Reverse mortgage, I try to stay away. There's been a history of some bad players, mainly in the US, that gave the stigma to reverse mortgages of being a product that could be manipulated to the disadvantage of older people. And of course, that's never the position that we want to be in. We've been in this business for close to 40 years. We take our what we do very seriously in terms of protecting older Canadians. And so for us, we look at reverse mortgage as a great financial option that actually liberates older Canadians and doesn't tie them down or put them in a worse financial situation than what they're in. But if it makes you more comfortable and you don't like using the term, then use payment optional mortgage, because that's exactly what it is. I mean, some people go so far as to say it's a payment-free mortgage, although that might be a little deceiving because at some point they've got to pay it. But payment optional is a great term that if you're uncomfortable with reverse mortgage, use that. Basically, a loan secured by the house, designed exclusively for homeowners over the age of 55. That's the only people we can deal with. We don't deal with anyone younger than that. It's tax-free because, of course, in Canada, we still have the ability to sell our principal residence, and there's no capital gains on it. So when you extract the equity, it's tax-free. No monthly mortgage payments required, although if some people feel comfortable making a payment, we'll certainly accept payments. on a monthly basis. And here's a big one, client maintains ownership of the home. Again, there's a fallacy out there that once you put a reverse mortgage on, the bank, us, we own the home. Of course, that could be the furthest thing from the truth. It's a mortgage. In some cases, reverse mortgages or payment optional mortgages might actually be the best solution. So you say, someone a little bit older comes to you and they need financial support because they want to pay out some debt, or they want to do a renovation, or they want to go on a big vacation. And the first things you might pull out are home equity line of credit. Great option for people that have equity in their home, want some flexibility, can draw on it, can pay it down as they like. The challenge with home equity line of credit, which is a great product, is of course there's a monthly payment required. And the other thing that people don't always understand or appreciate is the lender, whoever's lending that home equity loan, can actually pull the limit on that loan at any time. It is a demand loan. And so even though you may have comfort in knowing you've got access to, let's say, $500,000 of a HELOC, it may not actually be there when you need it if the lender decides to pull the limit. Of course, traditional mortgage, you could say, well, let's just remortgage your house or refinance your house. Again, there's a monthly mortgage payment. And these days, with rates being higher than what they've been traditionally for the last 10 or 15 years, that payment might actually really cut into their cash flow, especially if they're retired. And of course, there's always private lending. For some folks that are really in trouble, that can't get traditional lending, private lenders is an option, of course. But you all know that private lending is really a short-term fix, a short-term option that could be very, very expensive. We have many situations where we're paying out private lenders with a reverse mortgage, which is, a mortgage in first place. It actually gives great comfort to the borrower because there's no payments required. So again, sometimes a reverse mortgage or payment optional mortgage is actually the best option. So just keep it on your product shelf and make sure that you turn to it whenever you think it might be the best option for the customer. So, common uses. I know that many of you, if you've done reverse mortgages, you may have done it to pay out or to get a customer out of a bind, out of a difficult situation. Maybe they've accumulated a lot of debt. You heard the statistics. People are going into retirement with lots of debt. And you use the reverse mortgage to liberate them of some of that debt, liberate them of the monthly payment. That certainly is a great option. It's a great solution. Right now in our portfolio, about 40% of our mortgages are that scenario, what we call a need, basic need. That makes 60% not that scenario. And so when you look at those uses, those other uses, things like life enhancements, home repairs, renovations, travel, new vehicle. I have a neighbor who's fairly young. They've got 3 kids. They live a few doors down from us. And one day I was out for a walk and I noticed in the driveway, there's this beautiful new camper, an RV camper. It's a Mercedes Sprinter. It's one of those, all-in-one campers. I happen to know they're very expensive. I think they're in the range of $200,000 to $300,000. And the neighbor was outside. I said to him, hey, Greg, this is really nice. Did you just buy a new camper? He goes, no. He goes, it was my grandparents. That's my grandparents' camper. I'm like, really? He's like, yeah. All of a sudden they decided that, they're in their late 70s. They decided they want to start driving all over the place in a camper and exploring Canada. I'm like, well, that's a great thing. I said, how did, because I'm in banking, he knows I'm in banking. I'm like, how did they pay for it? He says, they got a HELOC. They actually got a HELOC. And he says, now I'm worried because I know that they need to make payments every month on that thing, right? And I said, well, I've got the great solution for you. Reverse mortgage. So again, you're starting to see more and more active lifestyle. People that are older in age don't want to do the traditional retirement thing of kicking up and doing nothing. They're active. They want to explore. They want to do things. Big vacations, is a big thing. Campers, second homes, third homes, vacation properties elsewhere, right, outside of Canada. So those are all great solutions that we can help with. The other thing we've talked about already, a gift for their children or their grandchildren. Where are they going to get that money to give a gift? If they take it out of their investments, they're actually impacting their own retirement, their own cash flow. On the other hand, if they take it out of the equity of their home, it's a nice, eloquent way to fast forward what would ultimately be an inheritance anyways. We call it a living legacy. And then there's another concept that we've been evolving that we've already gotten in front of many brokers to talk about, and that's custom solutions. As a lender, we do blanket mortgages. So you can literally have 2, 3, or 4 properties. We will blanket a reverse mortgage over those multiple properties. So again, if someone's older, but they want to invest in real estate, they want to buy a rental property to augment their retirement, we have a way to finance that. We have a way that you can help. Or here's another one, we call it proactive downsizing. Many older Canadians have lived in a large house, they've raised their family in a large house, but they can't handle it anymore, or they know they don't need the entire house anymore. They want to downsize. Well, look at the market the way it is today. What's better today, to be a buyer or a seller? Better to be a buyer, right? It's definitely a buyer's market. But if you're that older person that wants to move from, downsize from a large home to a smaller home or to a condo, you're stuck, because on the buy side, you're going to get a deal. On the sell side, it's going to be tough to actually sell your house. We have a solution for that. What you do is you buy your property that you want to be in, that you ultimately want to live in. We put a reverse mortgage on both, the blanket. You stay in your current home until the market changes a bit, until maybe it comes back into favor to be a seller. You can rent out the new property. Let's say it's a condo. You can definitely rent it out, earn some income on it, or leave it vacant. And meanwhile, you live in your current house until the markets change, and you're in a better position to maybe get a little bit more for your house. We call that proactive downsizing. And again, there's all kinds of these little strategies that we can talk to you about where a reverse mortgage actually enables you to do that. We're also the only lender that does reverse mortgages that allows second mortgages behind us. So there are situations where our loan to value is very conservative, depending on the age of the client and the house value. If we can't quite get to that point, to pay out their debts or to get them what they need, we do allow second mortgages behind us. We just ask that we qualify them for that second mortgage based on a TDS metric, and we don't want them to go over 65% loan to value in total. But again, some very, very flexible solutions. And again, to dispel some of the myths of who these people are that take reverse mortgages, we actually did a bunch of YouTube videos with some of our actual customers. And I just want to show you this one.
The CHIP reverse mortgage really made me stress-free. I've got no worries at the end of the month. I feel terrific.
It was financial
freedom.
Absolutely.
Yes. We were able to invest a little bit, take a nice vacation, and help our children.
55 and better by Home Equity Bank.
Again, we've got a bunch of those stories on YouTube. You can access them. I think they're on our Chip Advisor site as well. So again, if you're dealing with older clients and they're not quite sure and they don't know if it's for them, feel free to show them some of these, right? These are actual customers that we interviewed. And each one of them has a slightly different story. And what's interesting is you start to realize the breadth of support that we can provide for older Canadians out there. So don't just think of it as, that one narrow focus, right? Here's another myth to dispel. So, many people think, I get a reverse mortgage, and even though when I initially get it, it's at 40, 45, 50% loan to value of the equity value in my home, eventually, because we're capitalizing the interest, there's going to be no equity left. By the time I'm ready to sell my home, let's say in 10 or 15 years, there'll be nothing left of the equity in my home. And why would I do that to my family? This was going to be their inheritance. I don't want to erode all the equity in my house because this was going to be their inheritance. And frankly, some of the kids were counting on it. Well, again, that's a bit of a myth. We have a calculator on our Chip Advisor site where you can play out these scenarios. I mean, we've just picked a simple one here where the house value is $1.2 million. The reverse mortgage is $420,000. 10 years, they're going to stay 10 years in the house. And we looked at an appreciation rate of 2%. And if you look at Canada and the real estate appreciation across the country, 2% is actually conservative. Some markets, many markets, have been more like 3, 4, 5% house value appreciation. Now, the current scenario, quite different, right? Of course, condos especially, things are going down, not up. But over time, real estate appreciates in Canada. So the good news is, over time, even though you've put a reverse mortgage on and you're capitalizing interest, you're going to owe more at the end of the mortgage than you did at the beginning. In this particular scenario, the remaining home equity at the end of all of this in 10 years would still be $627,000. So again, it's a myth that I think it takes some work to actually sit with people and help them understand how the actual math works. I think the assumption most people make is once I get that mortgage and it's at 40% loan to value and the interest accumulates, my house will be worth nothing. Basically, I'll have no equity left. But the reality again is they never factor in, or they're not factoring in, the house appreciation, which is a big component. So why this older Canadians, and here's a tactic that you can look at, another strategy you might want to consider. How many of you right now are focused and actively working your renewal portfolio? Show of hands. Your renewal portfolio. Wow, it's less than what I thought. What are the rest of you doing? If you've been in the business a while and you've tracked your database, you're obviously looking at your renewals, customers that, maybe you booked 5 years ago, 3 years ago, whatever. You know that 5 years ago, 4 years ago, the rates were much, much lower than what they are now. Even though today the Bank of Canada dropped the rate, it's still not what it was back in 2020, 2021. So you call the mortgage renewal customer and you say, hey, your mortgage is up for renewal. I've shopped around for you. Here's some options. And guess what? Your mortgage payment is going up. It's definitely not going down. It's going up. Oh, so you just recently retired. Oh, well, I'm sorry to hear that. Now you're on a fixed income. Like now you're maybe collecting a pension or you're drawing on your RSPs. There are many customers in this situation that maybe 5 years ago, they took on a mortgage that was a very low interest rate, low payment. 5 years later, they're actually retired or they're about to retire. And you're telling them their mortgage payment's actually going to go up. So here's a strategy for you. Look at your database. Look at your renewal specifically. Cut it by age. And you could pick the age that you want to cut it at. I mean, 55 is the minimum, but you can cut it at 60, 65. And when you get that list of those 60-year-olds that have mortgage renewals that you're about to call, make sure you've got reverse mortgage, the chip reverse mortgage, as one of the options. Imagine how that would feel to someone when you say to them, your mortgage payment is going to double, but I've got an option, if you want, where you could have no mortgage payment at all. How would you like that? You're going to be a hero, especially if, again, they've just retired and they're just adjusting to living on a fixed income, right? Great strategy. Try it when you go back. Let us know if you need help with it. So this market's really only getting bigger and bigger. I mean, by the early 2030s, nearly 1 in 4 residents in Ontario and British Columbia will be over the age of 65. Over the age of 65. 93% of Canadians, we've surveyed them, homeowners, 93% want to remain in their home. They want to age in place. Again, it's a bit of a fallacy, right? I know a lot of realtors go around saying, oh, you're going to downsize, right? Oh, this house is too big for you. Oh, I'm sure you can't manage the house anymore. Let me help you downsize. Well, the reality is some will downsize, but many don't want to. There's just too much tied up in their home that they don't want to give up. Reverse mortgage, you as a mortgage broker can actually help them stay in their home. Longer lifespans, remember Angela and Anna, 94 and 92? And boomers are shifting away from inheritance. So in other words, when I die, you'll get this, to no, I want to see you enjoy it now. While I'm still alive and I can still appreciate. I've got a little granddaughter, 2.5 years old. She doesn't understand yet, but I know when she gets older, if I'm going to give her a gift, I'm going to give it to her now, like at a younger age versus waiting until I die, right? Again, many Canadians are of that mindset. So when you sell reverse mortgages and you sell chip reverse mortgage, we recognize you, we pay you quite well. We start at 175 basis points, which again, if you look at conventional lending, conventional mortgages, you get paid a lot less, sometimes for very complex files. Our files do tend to be quite simple. We don't ask for a lot in terms of documentation. We're really looking at the appraisal, the house value, that's the most important. Things like ID, tax certificate, insurance. That's about it. We don't test for income, right? We don't run GDS, TDS ratios. So quite simple. Start at 175 basis points. We have a peak program for commission where you can earn up to 200 basis points. I know some of our competitors pay a little bit more. If you're in a situation where that's the deciding factor, you're actually going to send them business because you're going to get paid more, I can tell you we'll pay you the same. You just need to tell your BDM or ask your BDM. But the reality is that, again, you could get paid very, very well for selling reverse mortgages. We also have an annual trip. We call it the Platinum Privilege Trip. It's a reward program where basically if you fund 10 mortgages or more in a given year, you qualify to go on this trip. And when you qualify, what it means is basically we look at the end of the year of our top brokers and we choose based on the volume. So even though you had 10 units, it's still going to be the ones with the highest volume that get to go on the trip. This year, in February, we're actually going to St. Lucia. So hopefully there's a few of you in the audience that might be joining me in St. Lucia for that trip. And that's it. We're here. We've got a booth. There's lots of opportunity for learning. There's lots of strategies. There's lots of different things, tactics that we can talk to you about. We've got a booth here. We've got a Chip Advisor site. We've got the largest BDM sales force focused exclusively on reverse mortgages in Canada. And so if you need anything, we're here for you. We just want to help you sort of explore this if you haven't already. And if you have, we want to help you go even further in this segment. Thank you again for your attention. Have a great day.